Okay, so today we are looking at the 1641 strategy on the 1 hour. In this section, we are going to leverage the use of moving averages to effectively trade the 1641 strategy with psychological levels. The strategy is for those who would want frequent opportunities on the 1 hour time frame. And then, so the main thing we're looking at the 1641 strategy on the 1 hour. Okay. So now let me just minimize this. And then we go to the charts. So let's go to crypto. Right. So we are going to be in the 1 hour, right? But then we are using the 1641 strategy, meaning that our key levels has to be on the 1641 or on the daily, right? So we can be on the 16 hour, which will give us the key levels, or we can be in the daily. It's the same thing. Yeah, the reason why we normally use the 16 hours, because sometimes we don't have a lot of data that takes us way, way back, but the daily should be okay. So let me just tidy up the screen. And then once I've done that, we can look. So I'm just refreshing our mind how we come by this thing, psychological levels and blah, blah, on these charts. So normally we go into the 16 hour or the daily, and then we'll find like sticking points or pivots, sticking point, like places that price has already been and stuck there. So we'll put a line, right? Like this one, put a line here. See, make yellow. Put a line there. We come to the side, prices at a sticking point here before. We put another line here. We come down this way. We put another line here. I think that could do for now, going far back. You know what I mean? So, and then we'll go to the 4 hour. Right. So when we go to the 4 hour, we could also still see some places where prices has been before and left. So we just increase them. That's all. So that's it. Really speaking, that is it. Okay. Right here. There's been some kind of sticking point here as well before. So H, that's it. So now when we pick it this way, then we have two options, right? The two options that we have is we can then open our psychological levels, or we can just say that, okay, let's do our triangles. Pick our triangles. We put it on it. And then we clone it. This one, we should all know how to do it anyway, but I'm just trying to refresh our minds.
Yeah.
Clone it. Reclone it. Reclone it. Okay. So we clone it. We clone it, and then we delete the lines. So we're going to take the horizontal lines off. Right. So once we delete the lines, then we go and we create our psychological level. So this rectangles that we created, this is the same as the ones created on the 16 hour or the daily, and then on the 4 hour. So we call it the 1641. Yeah. And then once we call this a 1641, we hide it. And then we can go and create our psychological level, which I believe we have already. So these are our psychological levels. You know what I mean? I was thinking that the psychological levels, we need to amend them slightly. So, but let's assume that we've got the right psychological levels. Let's assume that we've got the right psychological levels. Then what we'll do is we come and turn on this thing, the 1641, and then we align it to the psychological level. So this psychological level 2 on here, I'm going to turn on psychological level 1. Where's 1? this psychological level one. So we'll find the one which sits correctly. You see, so you can see, let me just turn off the 2. So when you turn off the 2, you can see that this psychological level, which is, I'll show you in a second. What's 16? This sec, where is it? I just named 1641 twice. It's playing with my head now. Wow. Oh yeah. Oh God. What's 1641? I just literally, oh yeah, that's all. So now you can see that when I turn them on and off, the 1641, some of them aligns with certain lines. I'm turning them off, on, off. You see, there's one which aligns here. So that one will put it exactly on this psychological level. Which is this one. So we put it exactly bang in the middle of the psychological level. And then this one is also close to that one. So we push it down onto that psychological level. This one's, it's not very close. So we see if that aligns with the other psychological level, psychological level 2. You see, it's more closer to psychological level 2. So I'll push it to in the middle of psychological level 2. This one is bang in the middle. So let's also push that one. It's a judgment. You can either push it down or push it up, but let me push it up. Then we have other tips. You know what I mean? So we've done the 1641. We've done our psychological levels. So we've aligned the 1641 to our psychological levels. So that is that. So we can then leave the 1641s on, or we can just take them off, and then we use the 1641 as a guide to know where there's a resistance, a major resistance, as we trade. Now, what I have here is I've got some moving averages. There is a moving average that I've discovered, but I'll teach that when we come to how to amend the this course section, how to customize moving averages. There are other moving averages. There's one particular moving average which is very, very good, and we've put even alerts on those moving averages. But let me show you what we've done now. What we have here is so far we've got 3 moving averages which we can add. We've got the 5, we've got the 20, we've got the 50, right? I've taken them off. So I'm going to bring them back on. The 5, sometimes you can either use the 4, 5 or the 4. It doesn't make any much difference. The 20, sometimes you can use 21. It doesn't make any difference. And then the 50 moving average. So in the previous one, we had the 100, the 5, and the 20. You can use the 100, the 5, and the 20 on this one too if you choose. But I found that the 50 is much more closer to the change of trend. It helps you. It's like a proper trend line in the process that helps you to determine the direction of the market quicker than the 100. So I'm using the 5, the 20, and the 100 in this case. So how do you use this? First, let's have an observation, clean observation. And we'll be having an observation first by eliminating the 50, right? So let's eliminate the 20 first, or the 21. Let's take the 21 off, and then let's take the 4 off. And let's have a clean observation. Simple observation. This observation is very, very simple, right? What we are saying is that when the price actions are trading above the 50, we are in an uptrend. When they trade below the 50, we're in a downtrend. And we know this. When they trade above, we're in an uptrend. When they trade below, we are in a downtrend. When they trade above, we are this thing. That same way, when we take off the 50 and we bring the 21 or the 20, you can clearly see that when they are trading below, we are in a downtrend. When they are trading above, We're in an uptrend. Trading below, down, up, uptrend. Below, down, up, uptrend. Okay. Now let's bring the 5 on top of the 20 or the 4. So you can interchange them. It's just up to you. You can clearly see that when the 5 crosses, the 20, it tells you that the direction is clearly up. Crosses down, direction is clearly down. Crosses up, it crossed up here, direction is clearly up. Crosses down, slides down, but it didn't go anywhere. You know what I mean? So when it clearly crosses. Now, you can see that for us to determine that we are clearly in an uptrend or clearly in a downtrend, let's establish what happens. So for example, we've crossed here. The 5 is crossed here. It retested, but when it retested below the 20. So the uptrend that we thought we were in here, or the uptrend that started here, has been violated. It's not going to go uptrend. So we need to wait for the cross again, or the candlesticks to come up. If we like, just even for now, just let's assume it's a cross. But normally it's the candlesticks that we're looking at. The candlestick crossed the 20, it retested, and then did as if it was going up, but then it dropped heavily. It crossed again, retested, like we got this doji candle, this one, this doji candle here. Got this doji candle, but it was on decision. It crossed again down, came up, and then, so it looks like this was a kind of retest, but it was on the 20. Because we were not sure to go into the trade, this candle, which is this candle, was on it. So we wait for this candle to come up. That gave us something like a morning star kind of thing. And then it retested itself and then buying, we end the trade. Now, when we get to this point as well, you can clearly see that we came down all the way down. We retested buying and we came down, but we came down exactly on the 20. So we couldn't have said the trend has changed. We're still in the uptrend. So all this, we can only, if we wanted to even trade, we could have only traded to this point. There is a moving average that I will show you at the end how to create, when we show you how to customize them. There's a moving average that I'm using now that can help you trade this one. But for now, let's go with the first principles. Now, we are still in an uptrend. It came all the way down to this bottom. It tried crossing, it didn't cross. So literally, we were below the 20 until this one crossed. When this one crossed above the 20, we can go into this one and trade it. You see? And then it retraces itself. And then it gave us this. We can go. Why? Because we are in an uptrend anyway. So any up opportunity you get, you go in. So up, up, up. So now, literally from here, you can see that although we're trading up, down, up, down, you could clearly see that we were in a sideways market from here, literally speaking, all the way from literally here. You know what I mean? Or let's even say, yeah, from there. Oh, right. No, there. We're in the sideways market all the way. Let me make it a bit light. Background. You could see. No, that's not the one. This background. Transparent. And then that. Yeah. Right, you could see that we were into this thing. So if you had seen that, oh, we are in an uptrend, up, 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 downtrend. There's something I'm going to show you guys when it comes to PDS. And if you see this like that, oh, we are clearly in a range. What you need to do is to scale down. Scale down to either the 15 minutes or the 5 minutes. Yeah. And in PDS, I'm going to show you guys some things, how to just scalp. You go into the trade, you make your 2%, and then you're out. You make your money, you're out. So I'm gonna, where is this 5 minutes thing? God. Have I gone too much? Where are you? You know what I should have done? Let me go into 5 minutes. Let me go back into the file, find the thing though. So it's here. So when the 1 hour, when we, yep, when the 1 hour. So let's go back to 30 minutes and find it. Yep. And then let's scale down to 15 minutes and then we'll find it. Yeah. So you can even go into the 15 minutes if you choose to, right? Or even the 5 minutes, but I'll show you that on PDS. You see? You see, you can go into this thing. And when you go in here, you can clearly see the movement that even though it looks choppy from here, you could clearly see the candlestick patterns going up. It gave you sideways. So then you can, as I was saying last week, just put a clear distance, even here, from here, put a clear line there like that, meaning that this is the lowest, right? This was the highest. Whenever the candlestick crosses this one, you are in the trade. It takes you down. And you can do this easily, either on the 15 minutes or the 5 minutes. It takes you all the way down. So, like, for example, if we were waiting for big moves on the 1 hour to be able to trade, and it's not giving us clear direction because it's going up and down, up and down, up and down, we could come down here and then trade this. And then we've made our 2.6%. You know what I mean? You know, so because you just look left and then you make, if it's not going, normally if you would look left, you say you come all the way down here, but these candles are too big to be used as judgment. Maybe we expect that maybe coming. It doesn't. So you just, it crosses here, you go in, do maybe something like a 1:2 trade. And when I say 1:2, it means that what you risk, you go in and then you try and make 2 of it, or even, yeah, 1:2. You can get 1:2 here clean. Make your 1:2, then you're out. That kind of thing. Here, sideways a bit. It gave you this. You can go into this for this short one, or it gave you this clear direction buying to the top. You see, so you just would go in and scalp the opportunities that you find. It crosses buying, you are in it. And it came down, it crosses again. It gave you this. You could be in it. So that is the 5 minutes. That one, I'll show you. It does the 15 minutes. I'll show you how you can scalp on the 15 minutes, on the 5 minutes. And you will be more than enough for you to, it's more going to be more juicy. Where is this? Yeah, right here. 5 minutes is too small. We can catch where this is. Oh gosh. All right. Can't find it. But when you go into the 5 minutes, you see, yeah, be there now. You see how clear, you see this, it looks very huge here. You know what I mean? You can see the opportunities very clearly that this thing too is helping us. The moving average, like we came here, we retest in the 5 minutes, boom, we are all the way down. Here, we retest on top, we are all the way up. You see, but this is the 5 minutes. So when you go into 5 minutes, you can see the clear opportunities that's sitting there. But you come all the way up, a retest came all the way, a retest in the 20, we are gone all the way up. Even here, you can just cop this shortly. These ones you can decide to, if it's clear, you can go in it. You know what I mean? So these are the clear ones. So here, you see, retested on it. Maybe you might go in, maybe you might not. When it goes and it retests, it should give you a clear direction. It came back down again anyway. So you can go into the 5 minutes and then you could be scalping because you know that this is the range within which is giving you that kind of up and down movement. So when you get the opportunity, you're in. You can, the next thing I'll do tomorrow is how we can trade this using this thing, trend lines. Okay. So that's that. So let's go to the back to this 1 hour. Okay. So that is putting the 5 minutes together with the 20. So let's go and add now the 50. Okay. When you add the 50, it just reinforces the direction in which you are. Do you understand? So we got this. When we go into the trade, we know we'll hit other 50. We got this. We retested, but the next candle was below. So we know we are possibly going into a lower trend. Cross this one, it crossed it up. We have to retest. Buying, we're going up. that kind of thing. So it is just the same principle as the other one, you see, and because it is the same principle as the other one, it is just following the same. The only challenge that I see with this is being able to find something to call you to go into the trade. So in that regard, what we can do is we can look at TDI, like how we're using TDI previously, yeah?
Yeah.
The way you would do that is first, you would ask whenever TDI, you can set TDI. First, establish what direction we are in. If we are in an uptrend, then TDI, you set TDI to call you to go up only. So when TDI crosses up, then you go and look for the opportunity because TDI will cross up here. But you see, when it crossed up here, we've not crossed the 20 moving average. We're testing on the 20 moving average. So you ignore the call. It will call you again here. And then when it calls you there, you go and then now you start watching the charts because it looks like this cross is called the 20, but you need a retest. So you'll be watching the chart for the next couple of hours to get the opportunity, then you can go into the trade. Here, TDI cross called again, but TDI said we're going up. Although we have this 50 moving average, if we go up, fine, we can go up because it's 50 is up in us. And then the 5 is also in the direction, so you can go in there. But it is when we are crossing the opposite way that you need the 20 to retest under. So for example, here, TDI also crossed again on this one, right? When it crossed, we know we are above the 50, we are above the 20, we can just jump in straight away. Here, like here, the current one is crossing down, but we need a retest. We are retesting above the 20 and above the 50. So this actually, it means that we can go into that uptrend. We can go and trade this up because the 20 and the 50 is giving us the momentum to go, that kind of thing. So it is literally the same thing. The challenge I've always had with the 1 hour is that being able to frequently be there to be able to come and trade it. Because of that, we've come up with a kind of a moving average. It is called HMA. This moving average, I'm going to turn it on and I'm going to turn the 4 off. So HMA, where is HMA? Yeah. Can you see HMA, the moving average? That's the one. I'll turn off the price actions and I'll show you what it is. So this white and orange one. This is white and we call it HMA. Very wonderful one. You know, so then that I'm going to teach you guys how to use it, how to customize your moving average. I'll show you. We take the indicator, the colored indicator, and then I'll give you a code, and then you paste it in. We customize everything, and then you can get all these things. You know what I mean? So anyway, when you're testing something and you think you need to tweak it a little bit to be able to help you trade, we can do it. So this HMA, what we use this HMA for is very simple. I'm going to turn on the price action again. You can see that when it changes color, you can set an alert for when it changes color to tell you to come and go into the trade or look at the trade at least. It changes the color here, which means this red candle is where it changes the color. But then when you come and have a look, you realize that, oh, we are above the 20. So we are not going to be going in. However, you can set another alert for when the HMA crosses the 20 image. When it crosses, it is a huge thing that is going to happen. Look here. When it crossed here as well, buying, you're up in the trade. It crossed here, we came down. You know what I mean? So the HMA crossing itself, you can just put HMA on it, and the HMA crossing can really help you. How do you find HMA in directory? Imagine you want to use HMA with what you have right now. You just is simple. Just go into indicators and type HMA. HMA moving average. Where is the HMA moving? HMA. That's it. You see the HMA. Pick any HMA at all, and then you set it to like 20. Right? So when you pick any HMA at all, set it to input. It's just 20, I think. 20. Yeah, so you've got exactly almost like the same thing. That's all. So you can then set that alerts and say that when the HMA crosses the 20, it should call you. With that, it helps you to even go into the trade up and down. But you should make sure that when HMA says I'm crossing down, the candlesticks are below the 20. Then you're going. When HMA crosses, make sure the candlesticks are in the right direction of the 20. HMA crossed here. It was funny because the moving averages were between, so it's like a sideways, even though HMA is crossed, that kind of thing. But here, HMA crosses up clearly. The candlesticks are above it. You can go into it. You see, so this is something, but I will teach you guys this thing when we do that at this thing, the customization, and then it will make your trade so snappy and so easy. But I don't want us to jump the gun, because if I introduce this to you, it will make you guys very lazy. It will make you be able to want to study the charts, and it will make things too easy. And that's not the plan. You know what I mean? So in about 3-4 weeks, we will just get this thing out and done with. Okay. So in the meantime, what we'll be looking at is we are looking at the basic 4 moving average, the 21 or the 20 moving average, and then the 50. And then you make your decisions. If you can either sit on the charts. And one thing I realize is, do you know the trading sessions? There are 4 trading sessions. Yeah, let me bring it up. I think I have it on my desktop. You can decide to choose one of the trading sessions, because trading the 1 hour, you need to just use a trading session. So you sit there for that session and trade if there's opportunity. There's to get a clearer call, like you can see my screen. Can you see my screen, please?
Yeah, I can see it.
Yeah. So we have the London session, the New York session, the Auckland, and the Tokyo session. So the London session starts from 7 a.m. Excuse me, guys. 7 a.m. to 5:30. The New York session will start from almost like 12 p.m. to 9 p.m. Right? And then Auckland session, normally that starts from 9 p.m. all the way to 6 a.m. Right? And then Tokyo session starts from 12 midnight. You see, 12 midnight to 5:30 a.m. So it runs the clock. So you can choose any of the sessions. Normally, because of our time, this time we can trade the London session, we can trade the New York session. You see, so you can decide that, okay, fine, you make time between those hours, maybe you take 4 hours, and then observe the chart and see what's happening on the charts. You know what I mean? When we get to PDS, I'll show you the strategy whereby you can easily trade on the charts. So you come and then you draw your lines and then you wait for candlestick to cross it. Any direction it crosses, when the candlestick closes, you're in it. And then you take your profit quick and then you're out. We traded that for gold and we traded that for GBP JPY today, but I traded other strategies for Euro JPY. So I'll show you those things on PDS, and then we can just use those things. So I think basically this is the basic concept for the 1 hour trading. You will look, so you can actually set an alert for the 4 or to cross the 21 based on what you choose, either the 4 or the 5 to cross the 21 or the 20. When it does cross, and then you can just wait for a retest, or when it crosses and you think it is clear enough, you go into the trade. You know what I mean? So then with that, we know that the 5 at least is crossed, the 20, and then you're in the trade. And then you look at here, this one, when it crosses, you wait for a clear, because normally we need a retest. You retest it, but you see, one thing you should observe is the moving averages are between the candles, which means it's sideways. It is not clear direction. So now it comes and it crosses up here, and then it gives you a retest. Buying, you're in it, that kind of thing. Here you see it is very much within. So when it crosses probably here, then you can go and have a look. I bet you guys know how to set the alerts anyway. So you can set this the moving. And the other thing you guys could use is also you can use the original 1641 that we did, that we were using the 4, the 8, and the 20. You remember? Yeah, you can also use that to trade this. So when the 4 crosses the 8, it can call you. Don't let the candle close in your legs. And then you can come and look at what is happening and see if there's an opportunity to trade. You know what I mean? So
Yeah.
that one we can use it for this, you know, because I love the 1 hour, the way the chart looks, but just that being able to catch the trades without sitting at the desk all the time is my
Mm.
own challenge now, you know. But with the 4 hour, we know that every 4 hour you can come and check the candles. Every 4 hour you can, just that with that, you don't get as much opportunities, unless of course you're catching the trade at the bottom, and then you can
Yeah.
stay and trade for a long time. You know what I mean? So that is that really. So we're just going to round up for today. And tomorrow, if we've got any questions, we can look at that. And then tomorrow we need to discuss to stick to one particular time. I have to go back to Pastor to let him know that it is only the core group that is attending the meeting. So what we'd have to do is to just stick to one day. If there's a new person, we'll get someone to help them go through the basics. Once we've got the person to help them go through the basic, they can just jump on and join the main group.
Yeah.
Okay.
That's fine.
All right. Good night, guys.
Good night, Mr. Michael.
Okay.
Take care.
God bless you.